It's Saturday, September 3rd, 2022. Wasn't planning on making a video today, but I had a little extra time and I was reading some articles this morning that I found pretty interesting that I wanted to share with all of you. Before I do, I want to start out this video by just talking for a minute about banks and why I believe it's important for all of us to be our own central bank. Many of us know that the banking system is not healthy, that there are big problems in the banking system. And I watch videos daily. There's a lot of people out there that talk about banking crisis, the banking institutions, the health of these institutions. And many of these people will talk daily about what bad shape the banking system is in and why you should have some money at home. But these same people say you should still have a majority of your money in these banks. I believe you should be your own central bank. I do believe that the banking system is a mess and that the banking system at some point is going to go through a collapse. Why these people tell you should maybe pull out a couple $1,000s, but leave $100,000 in the bank. If they really believe that the banking system is going to collapse, if they really believe that the banking system is not safe and sound, why would they tell you to keep a couple $100s at home or a couple $1,000s at home? Why would they tell you to keep any money in the banks at all? If you truly believe that the banking systems or the banking system is in big trouble, insolvent, going to collapse, etc., why would you keep any money in it at all, other than the money you use to pay your bills? This is why I believe you have to be your own central bank. This is why I believe you should have more money out of the bank than you have in the bank. Keep enough in the bank to pay the bills. Don't have a safe deposit box in a bank with your gold, your silver, your diamonds, cash. Any other assets should be outside of the banking system. So I don't understand why so many people will criticize the banking system, yet they're in the banking system. Why would you keep a couple hundred or a couple $1,000s at home, yet keep $100,000 in the bank? That makes no sense to me whatsoever. If you believe the system is in trouble, if you believe the system is going down, then you should have a majority of your money out of the system somewhere else. Now, wherever that somewhere else is, that is up to you. And this is why I advise that you buy a high quality safe or high quality safes and put this money in multiple locations. People believe it's like, wow, that's crazy. If you have X amount of money sitting outside of the bank, it's safer in the bank. Is it really safer in the bank? If you really believe that we're in a banking crisis right now, if you don't trust the banks, why would you have all your money in the banks? Do you really believe it's safer in a bank than you being your own central bank? This is something that I think a lot of people are waking up to and now agreeing that, hey, maybe their money isn't so safe. There's bail-ins, there's bailouts, there's cyber attacks, things like that can affect your banking. People right now have written me multiple times just talking about how they couldn't access their online accounts, their ATMs didn't work. So whether you have $1,000 in the bank or you have $100,000 in the bank, why would you keep a majority of that money in a system that you cannot trust, a system you can't trust, a system that is vulnerable, a system that is going to collapse? Ask yourself that. But again, these people who say, well, it's not safe to have your money in the bank, but keep a couple $100s at home in case the lights go out, the grid goes down, have a couple $100s at home. But the banks are insolvent, the banks are going to collapse, the system's going to collapse. So, well, why would you keep all your money in a bank then? That would seem like the worst possible place to keep your money. But again, there's so much hypocrisy out there. People saying one thing and then doing another. It's unbelievable. But I just want to touch base on that. Market watch. U.S. stocks close sharply lower, suffer third straight weekly loss after giving up gains seen on Goldilocks jobs report. It'll be very interesting to see what markets do on Tuesday. As we know, yesterday, Friday, markets across the board down. Dow Jones was down, what was it, 340 points. Can't quite remember, but at one point it was down 480, heading to 5. Could have been a really bad day yesterday. But these markets are on borrowed time. Here's another one from Market Watch. Vulnerable time for the housing market. Mortgage rates rise to 5.66, double what they were a year ago, and will likely slow house price appreciation. Of course, prices are going to come down, ladies and gentlemen. It doesn't take a rocket scientist to figure this out. Now, anybody with normal credit is not getting 5.66. They're getting 6%, maybe 6.25 now. If you don't have an 800 plus FICO, you don't have 20% down, you are paying over 6% for a 30-year right now. But we are going to see big trouble in the housing market. It has begun. Here's one. Average credit card rate, highest since 1996. Average credit card rate right now today is 17.96%, up 3.5% from roughly a month ago. Last year, the average rate was 16.21. That's an increase of 10.8%. This is no doubt going to continue to decimate people who are now dependent on credit cards to pay their rent, to pay for food, to pay for gas, pay for their essentials. And as we enjoy this Labor Day weekend, this 3-day weekend, and I hope everybody does, take time to add to your preparations. We are going to see horrific times ahead. And when I look at this, you would think that when banks were borrowing money for next to nothing, but passing on, a 16.21% credit card rate to you. Boy, wasn't that nice? Wasn't that generous of the banks that you trust all your money with, that you put all your money in the bank? Yet, look what they do to you. They were borrowing money for next to nothing and charging you over 16% on a credit card. And now rates are going up, and they're going to start charging you a lot more. And the people who did not listen, the people who did not heed the warning over the years now are the same people using the credit cards, the same people telling you, don't buy gold, right? Don't own assets. Nothing bad's going to happen. These were the people that doubled down on the cryptos who've been wiped out, the people who just went out and thought that this was never going to end, and now they're living on credit cards and they're on borrowed time. It's just unbelievable how fast the dynamics have changed, where people were getting free money, people making all this money in NFTs, making money in crypto, making money in the stock market, making money in the housing market, and now it's all over and done. And these are the same people that would write me and say, no, you need to buy cryptos. You want to hedge against inflation, you better have cryptos. You want to make money, you better have cryptos. These people have been wiped out. Yes, gold has pulled back, but gold is outperforming the markets in literally everything year to date. And when things get really, really bad, there is going to be nowhere else to turn but gold. And I believe gold will have its day. And to me, gold isn't even an investment. It's an insurance policy. And it's something that I can access within minutes. These people need a computer to access anything, which can be obliterated with a push of a button. A bank can shut your account down with a push of a button. Crypto can be shut down with a push of a button. We've seen these crypto banks and all these crypto companies being shut down, going into bankruptcy, being robbed. It's been a complete disaster. You need sound money for what we are entering right now. And to me, that is going to be gold, that is going to be silver, and even cash to an extent. Record turkey prices are coming for Thanksgiving. The bird flu has now affected 39 states this year. It says here turkey breast meat prices have climbed over $6.50 per pound. They were less than $2 a pound 2 years ago. I think we've lost over 37 million turkeys and chickens this year because of the bird flu. It's really something, right? When you see these food processing plants burning down, almost 40 million birds euthanized because of the bird flu. The child formula shortages. It's unbelievable what is happening. It really, really is. And it makes me think, like, what is this Christmas going to look like? What are retail sales going to look like? How are people going to even have a Christmas this year? How will they afford to have a Christmas dinner, buy gifts for the kids? This is going to be, I think, a very different Christmas than what we've seen in the past. This is going to be, I think, a Christmas that really begins to show us how bad this economy really is. The price to travel somewhere, the price for food, the price for gifts, the price for a Christmas tree, the price for a Christmas turkey. It's going to be a much different Christmas than the Christmas that we've had in the past, no doubt. And I don't think last year was a great Christmas by any means, but I think this one, people are going to begin to take notice of just how bad the economy really is. And I bring it up because, you know, when you think about Christmas, how many people take on part-time jobs, temporary jobs over Christmas, and what Christmas means to a lot of people, what it means to the economy. It gives the economy a real, you know, shot in the arm, a real boost. And I don't think it's going to happen this year. And you know, people are just going to have to begin to realize that maybe it's not about the gifts. Maybe it's about spending time with one another, quality time, family coming together, things like that. But this is not going to be a Christmas where we're going to see record sales. It's going to be a Christmas that maybe people aren't celebrating eating crab legs and lobster and steak. You know, maybe they're going to be, you know, just eating chicken and, you know, a ham. But it's going to be a much, much different Christmas for a lot of people. This article on the Daily Mail today should tell you just exactly how bad it really is. It's titled, "Hard Up Americans Are Now Taking Out Loans to Pay for Groceries Using Buy Now, Pay Later apps, which offer instant credit but can charge hefty fees for late payments." It says here in the article, more people are using Buy Now, Pay Later services to buy groceries and dine at restaurants. If you need to finance a meal, you should not be going out to eat. Look, nothing wrong going out to dinner, out to lunch if you can afford it. But if you have to finance a meal, you have no business whatsoever going out to eat. If you have to finance a watch on your wrist, if you have to finance a ring on your finger, if you have to finance a meal, you're in very, very big trouble. My advice today is stop financing these type of purchases, especially going out to dinner. This is a huge mistake. And this is why so many people are in big trouble, because they want the instant satisfaction, the instant gratification, maybe wanting to impress people, and they're going absolutely broke with this kind of behavior. Americans can even pay for a Chipotle burrito with an installment payment. Now, according to this article, think about that. People are financing a burrito at Chipotle. If you cannot afford to go to Chipotle, if you cannot pay cash money to go to Chipotle, do not do it. You're going to get yourself further and deeper into debt. And this article on the Daily Mail is another sign of the trouble we are in financially. The trouble that the average consumer is in, because they're going to have that burrito. They're going to go out to dinner. If they have to use a credit card, if they have to use a buy now, pay later plan, they're going to do it. And this is why so many people are going to get wiped out, why so many people right now are in so much trouble, because they cannot exercise control. They want instant satisfaction, gratification today. They want to impress people. They want to go out to dinner and take pictures of it, put it in social media. And this is why they're in big trouble right now. They're driving cars they can't afford. They're living in houses they can't afford. And they're going out to eat that they can't even afford to do. They're wearing watches that they can't afford to wear. This is going to be a disaster, ladies and gentlemen, a complete disaster. That article in the Daily Mail is another sign of big trouble to come. Another one today from wolfstreet.com. Fed's QT, total assets dropped by $139 billion from peak. In September, the pace of quantitative tightening is going to roughly double. Now, this really is a doomsday scenario. We talk about the impact that inflation is having on the economy. This quantitative tightening is going to have a very extreme impact on the U.S. economy, and it's going to be very, very negative to the U.S. economy. They're dumping, get this, in September, they're going to be dumping $60 billion per month of Treasury securities and $35 billion of mortgage-backed securities per month. Quantitative tightening does the opposite of quantitative easing. It destroys money, pushes up yields, pulls the rug out from under asset price inflation, and contributes to bringing consumer price inflation back down. Now, the problem with all this is they waited way too long. Why were they not doing this 10 years ago? And this is why it's going to have such a harsh impact on the U.S. economy, such a hard jolt, because it's 10 years overdue. And most people have no idea what this means, what kind of impact it's going to have on their life. This means that, look, they're destroying money. We're going to see a liquidity crisis taking place. It's going to get much harder to borrow money for a business. If you want to open a business and you need to borrow money, it's going to be much more difficult to start up a business, much more difficult to operate a business, because it's really credit that makes the world go round, right? Every business relies on some amount of credit, and it's going to cost more money to borrow money. You want to go out and buy a car, you're going to have to borrow money. It's going to cost more. It's going to cost more money to service the debt on those credit cards. It's going to cost more money to service the U.S. debt. It's going to cost more money to go buy a house, because the amount of money now to borrow on a mortgage, interest rate's going to go up. It's going to cost more to borrow money for that home, right? So everything, the cost of everything is going to continue to go up. Wolfstreet.com, here's another one. Stock sell-off, collapse of cryptos, meme stocks, IPO zombies bringing day traders back into the labor force. Very interesting. It says here a lot of people could afford not to go back to work because their most speculative bets were making huge amounts of money, and many thought this somehow would keep going on. These people have now fallen prey to their own hype and hoopla show. Their play money is now vanishing, if not gone. So, people who were buying the meme stocks, people who were doubling down in crypto, people who were in the stock market, people who were flipping houses, all this was jolted with the help of the Fed. All this was artificial, and now it's all vanishing, if not gone. But again, this was all fake, all produced by these artificial injections by the Fed, and now the Fed has done a 180, and if they keep the pedal to the metal, wow, we are going to see a lot of destruction. These people who are living so far over their heads, making so much money so quickly, not thinking that the party could ever end. And now they're realizing that the music has stopped and that the party is ending. And many of these people, because of greed, didn't get out. Think about if you made $1 million in crypto, but then you doubled down because you wanted to make 3 million, 5 million. You could have walked away. Same thing in the stock market, same thing in real estate, but it's greed that people just get so entrenched with greed that $1 million's not enough. Now they want 2 million, then they want 4 million, they want 5 million, and then before you know it, they have nothing. In fact, some of these people will end up owing money. They're going to be upside down in their investments. You're going to see massive margin calls. You're going to see people, when equity vanishes in these homes, they're going to be upside down in these homes. And some people, they have multiple homes. They're going to be upside down in multiple mortgages. Their credit's going to be destroyed. Their lives are going to be destroyed. And it's unfortunate because they stayed in these markets too long. They got greedy. They lived way beyond their means, way over their heads. And for the people that were smart, who are exercising patience, who are building up the war chest, they are going to capitalize on the worst economic collapse in U.S. history. And unfortunately, you're probably going to be buying these people's houses, these people's cars, their boats, their RVs, these people who just thought that the party was never going to end. Look, you got to have self-control in this economy, in these markets. Right now, you got to be exercising patience. I know it's hard for people. They want things to collapse right now. They want the sales to begin right now, but it's a slow process, but it is accelerating. And I think people that do exercise patience are going to be very, very happy that they did, because we're going to see the biggest sales of our lifetime. This is a once-in-a-life opportunity that is coming. It's never going to happen again in my lifetime. I know that, and that's why I'm going to do everything I can to build up my war chest and take advantage of these record sales that are coming. Most people are going to lose, but a small percentage of people are going to make a lot of money. They're going to acquire a lot of asset, a lot of real estate, a lot of cars, a lot of stocks, a lot of land, you name it, because they were patient. The dips have not begun yet, ladies and gentlemen. Months ago, they were telling me, buy the dip. I'm wrong, buy the dip. Those people all disappeared because they thought that was the dip. They were wrong. The dips have not even begun yet. It's quite possible we could see another 50, 60% in these markets obliterated. And that's not a joke. I really, truly believe we could see another 50, 60% wiped out of these markets. Not overnight, but it's going to continue to where we see lower lows, lower highs, and it is quite possible we do wake up one day and this thing is a runaway freight train and people are going to be like, what just happened? You know, we could see the Dow Jones lose 2,000 points in a day or more. They're going to lose control of this whole thing, and I don't think the Fed is here to save it. Everybody thought the Fed was their friend. Don't fight the Fed. Well, now that the Fed isn't their friend, now they want to fight the Fed. We're going to see how it plays out, ladies and gentlemen, but I can tell you this. It is not going to get any better anytime soon. So prepare for a major storm. Continue to build up those war chests. Have a great weekend. Have a safe weekend. Make sure you're spending time with your family, your friends, and make sure you thank God for everything you have. Add a little bit of balance to your life. The world is not coming to an end. It is just going to change. Make sure you get on the right side of this change. Most people are ignoring the economic tsunami that is coming. Prepare for the storm, ladies and gentlemen, because I think you're going to prosper. God bless.